Hey everybody, welcome back to Trades and Gains. I'm your host Max Pitts, and it looks like Verizon is set to release their Q4 earnings on January 24th. And there's a lot riding on this. Will it be a major flex for Verizon or just another dud in its earnings playlist? Let's go ahead and break it all down. So here's the headline. Analysts expect Verizon to post earnings of $1.09 per share and revenue of around $35.4 billion, a slight year-over-year increase of 0.8%. Sounds decent, right? But here's the thing. Decent doesn't always cut it in today's market. So let's go ahead and add some context here. So on our analyst sentiment, we have a lukewarm forecast, with the Zacks consensus EPS estimate actually being revised downward by 0.46% over the last month. That's like your teacher bumping down your grade before you even take the test. Not exactly a confidence booster. Oh, and the earnings ESP, a metric that predicts surprises, negative 0.40%. Yeah, that's like showing up to a track meet with one shoe untied. Now, the dividend dilemma is the next thing, because Verizon has one of the juiciest payouts on the market, a 6.2% yield. It sounds amazing, right? But here's the T. A high dividend yield can sometimes be a smokescreen for deeper issues. It's like putting a Band-Aid over a broken bone. Are they overcompensating for their stagnant stock price? Maybe. And the other thing is Verizon is going all in on 5G. And I mean all in. They recently dropped $9.6 billion on reacquiring fiber optic lines from Frontier Communications. And is this ambitious? Sure. Expensive? Yeah, you bet. And if they can leverage these investments to dominate the 5G space, it's game over for the competition. But if they fumble this, well, let's just say investors are not going to be thrilled with it. Now, Verizon's currently trading at around $39, $38.99 a share, and it's been treading water while its peers, AT&T and T-Mobile, are sprinting ahead. T-Mobile especially has eaten into Verizon's market share with aggressive pricing and innovative offerings. Verizon is like the kid trying to play catch-up in gym class but keeps tripping over their own shoelaces. So what's the upside? Verizon's aggressive push into fixed wireless services could pay off big. They're aiming to double their subscriber base by 2028. And if they hit that goal, we're talking about over 90 million connected households. That's a lot of streaming, scrolling, and TikToking. They're also expanding their fiber infrastructure, which could boost their competitive edge in underserved areas. This could be a smart play for long-term growth, especially as the demand for faster internet is going to continue to skyrocket. But let's not sugarcoat it. Verizon is battling high 5G rollout costs, stiff competition, and declining wireline revenue. Their traditional services are getting crushed by the rise of VoIP and aggressive triple play offerings from cable companies. And don't forget the CapEx. They've been burning through cash faster than a teenager with their first credit card. Now, what is the verdict here? Hold or fold? Here's the bottom line. If you're already holding Verizon for the dividend, cool, just don't expect any fireworks. But if you're thinking of jumping in now, you might want to wait until after the earnings report. There's just too much uncertainty to make this a slam dunk buy right now. All right, and that's a wrap on Verizon's Q4 earnings preview. Will it be a mic drop or a missed call? We'll find out soon enough. And don't forget to like, subscribe, and hit that bell for more no-nonsense market analysis. And let me know in the comments, are you bullish, bearish, or just plain confused about Verizon? Let's discuss.